Something seismic just happened in global trade, and it's already sending shockwaves through economies around the world. President Trump has launched a bold new trade strategy that he's calling Liberation Day, but to many, it's starting to feel more like economic lockdown. This week, the US government rolled out sweeping tariffs, starting with a 10% minimum on all imported goods. That's just the floor. For some of America's biggest trading partners, the numbers go even higher. The European Union, 20%, Japan, 24%, Vietnam, 46%, and China, an eye-watering 54% once you factor in the new and existing tariffs. And if that wasn't enough to make the market sweat, a flat 25% tariff has now been slapped on every foreign-made car and auto part entering the country. And history might be repeating itself. Just 24 hours after the announcement, global markets responded with panic. The stock markets saw their worst one-day performance since 2020. $2.5 trillion gone. In Australia, the share market plunged nearly 4% in a single session. In the US, losses pushed past 6%. According to the Penn-Wharton budget model, the consequences of this tariff strategy could be massive. They project a hit to US GDP of 8% and a 7% drop in wages. For a middle-income household, that could mean a lifetime loss of $58,000. Let that sink in. That's twice the impact of a corporate tax hike, something economists already call one of the most damaging policy tools when it comes to growth. And we've been here before. In 1930, the US passed the Smoot-Hawley Tariff Act, dramatically raising tariffs on thousands of imports. The rest of the world retaliated, trade collapsed, and the result? A global depression. In 2002, President George W. Bush tried something similar, steel tariffs. The outcome? Job losses in U.S. manufacturing exceeded the total number of jobs in the steel industry itself. The S&P 500 took a nosedive. The policy was quietly rolled back just months later. Today's tariffs risk replaying that script on a much bigger stage. Economists aren't mincing words. One analyst put it this way: this level of uncertainty injects chaos into global supply chains. It raises costs for businesses, inflates prices for consumers, and freezes investment. If this continues, we're not just facing higher prices, we're looking at structural damage to the global economy, and the ripple effects touch everything. Businesses that rely on imported raw materials, they're now paying more. Manufacturers that assemble products using foreign-made components, their production costs just went up, and for consumers, expect to see price tags rise across everything from tech gadgets to groceries. There's another sign of just how serious this is: the Economic Policy Uncertainty Index, which tracks how uncertain businesses and consumers feel about the economy, has just hit its highest point since the early days of the COVID-19 pandemic. That's not a coincidence. Uncertainty freezes decision-making. When people don't know what the rules will be tomorrow, they don't hire, they don't spend, they don't invest. So where does this all go? Trump's supporters argue these tariffs are a negotiating tactic, a way to pressure trading partners into better deals. They see it as America taking a stand, reclaiming economic power. But critics warn that the global economy isn't a zero-sum game, and turning it into one could backfire spectacularly. There is no doubt these tariffs mark a turning point. But the question now is, toward what? Will these moves rebuild American industry, or will they usher in a new era of global economic fragmentation? For now, all we can say for certain is that the world just changed, and we're all going to feel it. Let us know your thoughts. Is this bold economic leadership, or a dangerous gamble with the future of the global economy?